Hello, everyone. My name is Nathan Kolb, and I am the host of Credit Safe Webinars. And I'd like to welcome each and every one of you to the webinar today. We're going to get started here, and I want to give you a few instructions, give you a little bit of just kind of ground rules, so to speak, here before we get started, because we'd like for today to be a real discussion regarding the credit industry and what's going on and all of those type of things. So we have some ways to do that. But before we even start about that, I want to let you know that today's webinar is being recorded. If that is not acceptable for your day, for what you're doing, for your company, whatever it is, please go ahead and leave now. We don't want to infringe on any of those things. I also want to let you know that you will have the opportunity to go ahead and get a recording of this webinar afterwards. So we'll send you a follow-up email in the next 24 to 48 business hours that will have a link to the recording. So if you don't want to take notes right now, if something's mentioned that you're like, oh, what was that? It'll be there for you. You won't have a problem. It'll be fine. So it won't be a problem to get in there and learn about that. Or if you want to connect with any of our awesome panelists today, you'll be able to do that through there as well. We will include their LinkedIn connections on that email / that landing page that you'll be sent to for that. So now that we have all of that out of the way, today we're going to be talking about the past, present, and future of the credit industry. And to do that, we've put together this amazing panel of experts. We have some awesome stuff coming up, but my enjoyable, most fun thing here is that I get a co-host today. And I rarely have this. I generally am asking all the questions, doing all the lifting, doing everything myself. And I'm really excited to have my co-host. Lena Jadamo is here today with me. She is going to be my co-host, the color commentator, the subject matter expert, and to my just ramblings. And Lena is currently the Director of Enterprise Accounts with Credit Safe Canada. She's a certified credit professional. She's been in the industry for over 20 years. Most of you are here because you know her and love her. So I don't want to take away any of her time. But Lena, tell us a little bit more about yourself. Give yourself a better intro than I could. And then if you want to go ahead and introduce our panelists, that'd be great.
That's awesome. Thanks, Nathan. Thanks for the intro. I'm not sure what more to add to that other than I've been in this industry now for over 20 years. I've worked in many different markets, electronics, food industry. After being a credit manager for so long, I decided to venture off to the other side and work on the sales team to be more of a consultant type role to kind of really help our customers and our prospects get a better understanding of maybe some pain points within their organizations and how we might be able to help them. So I really appreciate the intro and the time here today. We have a great panelist, a great panel here to share more information with you. And I'd like to introduce each of them to you. We have Julie Young, Ken Young, and no, there's no relationship there, and Michael Farrel as well. And I'm going to turn it over to Julie so that she can introduce herself to everyone on the call today.
Thank you, Lena. Hi, everybody. I'm glad to be here today. I am the Director of Credit for Day & Ross and have been in that role for the past 5 years. And previously, I've been in the transportation industry for about 15 years. And also, I'm a credit specialist with the Credit Institute of Canada, continuing education there to become a certified credit professional. And I guess I would say, did I start out to work in the credit industry? Never really expected to be in the credit industry, but I'm very happy to be here. It's fast paced. It's always changing, ever changing, and enjoy it immensely. So again, happy to be here today.
We're happy to have you.
Thank you.
Ken.
Sure. Well, I can say that I'm happy to be here today too, and on this webinar. It's kind of unique. I've never had to introduce myself before, but I'll give it a shot. I've been in the credit industry for 25 years. I've been with a broad range of companies over that period of time, including the food, the aquaculture industry, the beverage industry, chemicals and manufacturing. I've written a number of articles that have been published, and recently I helped compile and author a free mentorship book for people in the credit profession. Be glad to give that to you if you'd like to read it. It's a good read from various people in the industry and have stories to tell that might be helpful to you. More recent projects I've been involved in consulting and speaking have included countries like Canada, United States, Brunei, and Jamaica. And most recently, I was the credit manager for Pepsi in Canada. And prior to that was the credit manager Americas for Stoltz Sea Farm, an aquaculture firm that where we raise sturgeon and caviar, to name a couple of species. I serve on a couple of boards. I serve on one board, the National Credit and Financial Executive Forum with Lena. And I also serve with Lena on the Credit Institute of Canada's board. And I've been honored with the award, the CCP Emeritus Award, for kind of giving back to the profession. And it's something I'm proud of. And there you go. I think that that wraps me up.
That's great, Ken. Thank you. Michael, on to you.
Tough act to follow. I'm Mike Farrel. I'm a VP of National Accounts for Euler Hermes, which is the largest global trade credit insurance provider. I've been with them for about 20 years in various roles, mainly on the sales side, so dealing with customers across Canada with global operations. Insuring about, for Euler Hermes, we insure about $1 trillion worth of trade annually within my own portfolio. It's a pretty significant piece of that from the Canadian operations. Yeah, I've worked with a variety of different industries, different size customers, from $1 million in revenue all the way up to the large multinationals. And yeah, happy to be here. Thanks very much for having me.
Thanks, Mike. We're happy to have you too.
So now that you know who's here and we have a little bit of a lay of the land, we're going to jump into the discussion, folks. And what I want you to do, if you have a question, if you'd like to add something to the discussion or interact with these folks, at the bottom of your screen is this little Q&A text bubble thing. Go ahead, type in your question. I will be watching that the entire time. I've got it up right now. And if you have any questions, you're going to either get a typed response from me if it's just a comment about something, can't hear somebody or something like that. But if it's a question, I will answer it, or I will ask it live, and we'll have our panel answer it live, and you'll be able to hear what they have to say. So that's how we're going to do this going forward. And I'm going to jump right in. And Ken, I'm going to throw this first question to you. You know, in the credit industry, what have been the major challenges this year? I mean, 2020 has been like different than anything anybody could have ever predicted and anything we've ever seen. What are these major challenges this year as opposed to any other year?
Sure. Well, I like to say, first of all, that we are in a crippling economic state and shaking various economies and companies to the core, basically. But on the credit industry, not all companies have been affected the same way. Like big box stores and Amazon and those types of companies, they've done well. Delivery services have really done well during this pandemic, whereas so many companies like restaurants and depends kind of where you are in the credit team and what area you're actually selling into, how you've been affected and what changes you've had to make. But I would say generally that the majority of people have had to find ways to make substantial changes, gearing up or gearing down, mostly finding a way to. One area specifically is managing remote staff. Like that has been a real challenge for so many people. Analyzing risk and being up to date with information, that's timely. Like some reports that we've had before, old financial statements are useless in this day and age. We need information that's rapidly evolving and stuff that's really up to date. So sourcing relevant information has been a challenge. I would say handling customer payment delays and what capabilities your company have, and like what financial stability your company has and how much you can afford to do it, and learning what your competitors are doing to kind of know where you kind of fit in the credit industry per se. And it's a challenge to maybe meet competition, but you just have to find ways to make it work and help your sales team and be successful. Managing debt is the other thing that kind of goes hand in hand with collections. So, I would say those are the key areas that picking up key data aspects as far as trade information goes, and reliance on finding ways to get reliance on trade information, whether it's from your competitors in the industry trade group, or even bringing on new suppliers of business information reports, being up to date. Those have been some of the major changes that I've seen.
And I got to interject there that we don't tell people what they have to say on these, but you couldn't have teed that up better for this being a credit safe webinar here. Ken, I mean, that was perfect. We're here, guys. We're here. Even Ken says it.
I think we're done now. I think Ken's brought up all points.
So everybody that's listening, go to creditsafe.com, sign up, and we're good. Everybody's done.
By the way, I'm checking my mail tomorrow.
Yeah, right. Like, I guess we got to put a check in the mail now.
Those are really some great points there that you raised, Ken, and we'll give others an opportunity to say a few more things if we've missed anything. But what I like. A few of the things that I like that Ken said is that there's definitely been an impact to businesses, and we're not at this point, we have some that have been impacted negatively and those that have been impacted positively. There's been disruption in our supply chains. What does that mean for the credit department or, the credit manager when they are faced with some of these disruptions, right? We now have to perhaps source product elsewhere, maybe have, look at vendors and how we deal with vendors. Maybe, we're too focused on our customers' financial statements, and what about our vendors, and what has this done for that part of our business too, right? If you think about the role of the credit manager and the analysis or the level of analysis that they do on customers, I think that those same principles apply to vendors, and maybe it's an opportunity now to have a look at those as well. One thing that Ken did not mention was the stimulus package or stimulus packages, in Canada and in the US. So, maybe some of you can comment on how that has perhaps, changed or impacted or presented a challenge for you with some of your customers.
And actually being notified or being aware of when that stimulus package is coming for your clients to know when to make a collection call.
Right. That's what I was going to add. Having a strong collections team is really important right now. And with things changing daily, you have to be aware when what is coming out with those stimulus packages, who is getting it, so that you know when to make that call and are first in line, basically, to get paid.
Right.
Yeah.
Right.
Good points.
Yeah, that was definitely something that I was going to mention as well, from the standpoint of, if you look back to, March, April, May, the challenges that nobody had really faced before were state shutdowns or provincial shutdowns. So you had regional shutdowns within certain states or provinces where things couldn't get in or out, including mail. So for those who still get their invoices sent by mail or their collections done by check, that presented some issues as well. And you needed to know your client a little bit better than normal to ensure that it wasn't really a delinquency issue. It could have just simply been a delay due to something that's uncontrollable.
Right.
Yeah, and honestly, Michael, we've even heard from clients and customers that we're having to go in clandestinely to the office at night to collect their mail because they couldn't get it forwarded to their homes or anything, and they had to get those checks. They had to get that information. So they're showing up under cover of darkness, so to speak, just to be able to get those things. And it's crazy, but I don't think anybody in February of 2020 thought that that's what they were going to be doing with their evenings, trying to do that. But it's a great point that you bring up.
Yeah.
And Michael, I'm going to come back to you with we see this, but how with that, obviously that may not be the best answer, but like, how is the credit industry dealing with these challenges? What do you see happening there with the changes and how you're dealing with those things?
I think it depends largely on the financial strength of, in my case, my customer. Some of them literally had their sales fall off a cliff during the worst of this, and they had to scramble and think of new product lines and offerings. But for those that were able to adapt on the fly, they were having to took it as an advantage for them to switch their clients off of those checks into electronic payments, which isn't necessarily simple, but they were certainly doing the best they could. That was one of the key points that we saw happening across different industries.
Okay. And anybody else? I mean, what have you guys seen?
Well, I think some of the other challenges, like handling and dealing with remote staff, has created a whole new set of challenges. You know, kind of being able to motivate and encourage people working in a work, a home environment where they might have kids or pets kind of running around. So to try and help provide leadership and support in that area, that's been a kind of a learning curve for so many people that are in that position. And continuing to assess risk has been a challenge. And KYC, know your customer, has never been more of a challenge and more important. Know what's affecting them day to day, and being able to quantify your risk by customer, it has been key all along here. Those are a couple areas.
Mm-hmm.
Yeah. In some conversations, go ahead, Julie, sorry.
I was just going to add the working from remotely. You've said that a couple times, Ken, and it's also not just our own teams working remotely. It's also the customer. So when we talk about them receiving invoices and processing invoices, they have had to change their entire procedure in some cases to move it from a manual hands-on procedure to an electronic one. So that's really been a challenge.
Yeah. And a great point there, Julie. I was just going to comment on that as well as technology. I think we've seen, technology has really taken a lead here, and we've had companies who have had to move to electronic payments, and and not only on the payment side, but even on the monitoring side, evaluating their customers and Zoom meetings and different platforms that they need to use. So technology has really taken the forefront. And I know a lot of companies spend a lot of time and money in this area in the past, but it's just so obvious now that that some companies are lacking, and that they needed to make some huge changes in order to stay competitive and to to be able to perform some of the functions of the credit department.
Yeah, absolutely. And we actually have a question that's dealing with this too. Is they're asking, how do you foresee AI, artificial intelligence, actually as a partial solution or a possible solution for the industry? I mean, is that something that we see coming for the industry?
Is that being directed at anyone in particular?
Anyone that would like to answer, I'll give it out there. I will let that one just kind of fly out there.
Okay.
I'll speak on behalf of Euler Hermes. I know that we've got some major initiatives in play already on our side, and we partnered up with some local universities for assistance in the AI realm, because as big as we are, investing in something like that internally is not always cost effective, and it's a lot of time. You need the right resources to do it properly, so you might as well engage some very seasoned people in that space, and that's something that we've started to engage with and test and model internally, and it's certainly showing some pretty significant results so far.
Mm-hmm. And what we've seen with customers, a lot more customers are interested in APIs, for example, having data delivered directly into their CRMs so that they can make some quick, fast decisions when the time is right. So really the importance is even more elevated when we talk about, having enough data on our customers and, being able to assess their current situation. And even better communication, right? Like just, someone mentioned earlier, knowing your customer, right? Having, better communication now with our customers. And sometimes that can be driven through an API and the amount of data that we're collecting on our customers. So understanding, who that customer is, what the position is, what their financial situation is, and then, following up with your customer to make sure that that things are going well for them.
Yeah, real-time data, or as real-time as we can get it, is what's needed right now. And I totally agree with all the comments.
Yeah, and one thing to point out too, for that person that asked it, and any of you that are a bit more techie focused on the in the audience, a lot of what we're talking about, a lot of what we're seeing in the credit industry is very focused on automation and integration. We're not quite to that AI true period yet. Like Michael was saying, I think it was that we are, that's on the forefront, but it's pushed a very often manual driven process into a much more automated and integrated process that will then eventually matriculate over to that AI setup. So I think it's coming. I think we're just a few steps away from that in the credit industry. But you know, the automation is a huge thing right now.
Absolutely. And what we see now is a lot of companies are trying to build their own models so that they can be more effective and efficient when it comes to making decisions. So, you know, having that information delivered directly to their CRMs into a model that they've created so that they can, you know, check all the boxes and get a yes or no decision in a very timely manner, I think is, you know, where a lot of credit departments are looking to for the future.
Yeah, and added to that, that same person just dropped in, you know, data integrity is essential. And, you know, you're talking to the right people here on that one with the Credit Safe group. That's you know, a huge part of what we do every single day is just trying to make sure that that's there. And like, maybe Julie, I'm not sure, Julie or Lena, one of you said something about the real-time data or as real-time as possible, you know, and that's something that we're trying to deliver all the time through those integrations so that folks have the ability to make those decisions that they need to make. And then there's another kind of comment question on this one. Knowing and understanding the various state or province taxing rules has been a big change and a big challenge. This particular person had to switch shipping to different customer warehouses, and then you have to be aware of how that would affect that state, what rules and regulations, taxes, so on and so forth are there. Are you registered in that state? Are they not? You know, all of these type of things. So it ends up with a whole different thing. Have you guys seen a lot of that on the legal side of things in the credit industry? I mean, it's still credit, but have you seen that of the various collection laws and the various you know, the ability to send invoices, not send invoices, how you have to do it and all that throughout the various provinces and states?
Well, we have to, yeah, it's something we have to definitely be aware of, and in connected to that with the new, you know, the rules by province in relation to the pandemic and the states. It's something you have to, you know, be on top of all of the time. Absolutely.
Anybody else? I don't want to cut anyone off.
Enough said. you have to be on top of it. Yeah. It certainly, I think for certain areas, there have been some, been some leniency from the government in certain facets, but certainly when it comes to taxes, especially given the drop off in revenue for this, you know, municipalities in the states because of things that are happening, it's going to be paramount that they're going to be looking for the right taxes coming in to feed all of these bailouts.
Okay, and we've got the audience even calling out specific speakers here. So Julie, you're on the hot seat here. Question coming directly to you, but anybody can add on to it. How much do you rely on third-party outsourced collections versus first-party programs that will enable you to meet certain KPIs during this? Are you doing it internal, external? How are you handling that right now?
I would say 99% is internal, because of knowing the customer and having that relationship. We've found that has been instrumental in doing well and meeting KPIs throughout this. Customers are very, you know, forthcoming with what's going on in their world, and we have been able to, you know, have conversations around what they can do, what they can't do, what we can allow, and what we can't allow. So we've made that choice to keep it, you know, within our group. We do of course do some outsourcing.
Mm-hmm. Okay. Lena or Michael, anything to add with that one?
We have
or Ken too. I don't want to exclude you, Ken. Sorry.
Go ahead, Mike.
I was going to say, from Euler's perspective, we not only collect our own sort of premiums for our insurance programs, but we get engaged by our customers to as a collections agent for them in certain circumstances. So that's all done in-house. We may use third parties for from a legal perspective to send out letters, that are more familiar with state laws or provincial laws. But other than that, it's done in-house as much as possible.
The only thing I was going to add there is that, the credit policy is really going to dictate, that collection activity and whether, when you're sending that to a third party agency or why you're sending it to a third party agency, making that decision, again, checking those boxes. So, your policy is really going to dictate when and how you do that.
Yeah, absolutely. That's something we've definitely seen folks really trying to look at those and then even sometimes revise those credit policies to do that, because I know we've done a few webinars on the collections and those have definitely, those third-party collection agencies and firms and everything have really seen an uptick with folks just going, I don't know all the laws. I don't know all the regulations. Could you please help me? So it can be a real benefit.
I'm wondering if, how much activity is out there when it comes to third-party collections. I'm assuming that, companies are being a lot more accommodating now, given this pandemic, something that, we've never seen before, have had to deal with, and, maybe perhaps extending the terms or being, a little more forgiving on the past dues. I'm just curious to maybe what some of the others have seen.
I definitely think that is happening. Right now, it's just a different time. And not only are we trying to collect money and protect the business, we're also trying to grow the business. So to do that, there are sometimes some concessions that have to be made on both sides. So yeah, that is happening.
Sure.
On our side, we have a requirement underneath the policy conditions for, under normal circumstances, a policyholder would report somebody who's got a balance of over a certain amount of set dollar amount and 60 days beyond terms. So during the worst of the pandemic, we realized what was happening out there in the market, and we didn't want to trigger even more work for people working remotely and dealing with all of these struggles. So we extended out that reporting threshold by an additional 60 days and wanted to let the dust settle a little bit before collecting that data to show what's truly past due. And despite doing that, we were still seeing record numbers of reports being filed with us, which was pretty concerning for what was the reality of the situation. It was dire for a lot of businesses.
Right. Yeah, and a couple of comments that are coming in on that from at least one of them I know from someone who's involved in collections. It says many clients are engaging in first party or soft call representation as they have furloughed staff and have needs to keep money coming in. They have to keep that cash flow. Then another comment that says we're seeing a significant increase actually, and clients have pared down their staffing in a lot of cases and need the professional help without the payroll and overhead. So there's a lot of that going on. And I'll just give a shout out to the webinars that we've done in the past. We have multiple webinars on both internal and external collections that we did just about a month ago. So not outdated, not something from February or March that has changed since then. Stuff that's pretty close that you can always go back and for free watch any of those folks. So another question, and then we're gonna keep rolling with these, which I love having this discussion here. Question for Michael specifically, given the state of the retail industry, how has Euler reacted to approving retail stores for credit insurance?
The reality is the retail industry is struggling immensely. Other than the Amazons and the Walmarts that were well ahead of the game in terms of online shopping and having that readiness for these types of situations that have presented themselves. Whether the times are good or bad from an economic standpoint, evaluation that Euler does is purely based on financials. It's not based on a relationship necessarily. So if the companies are showing some significant losses or leverage and things of that nature, then our primary focus during the worst of this was less so on profits. It was more so focused on liquidity. So There was a little bit of a dynamic change with our risk evaluations, but it's safe to say that our evaluation of companies within the retail industry was tougher than most, because that's where we were seeing significant past dues, significant claims, and we needed to adjust our underwriting criteria within that industry.
Makes complete sense. Yeah. And I know, I mean, I would love to hear you guys speak on that, just kind of on how you've adjusted based on these things. I know for Credit Safe, we looked at both, we created a COVID-19 impact score, how that was going to go. And then we kind of looked at it and we're like, but we still have to look at what a business was going to do anyway. What was their credit history? What was their financial state? So we actually combined the two to give the true impact score of were they solid financially, before this, and then how are they doing based on what we can see with COVID happening and everything like that. So I'm sure you guys have all dealt with that as well. So I'd love to hear how that's kind of working for you guys. Don't all answer at once.
We definitely look at conditions now more than ever, location, industry, all of those things. And we have reviewed our credit policy and re-reviewed our credit policy over the past little while, again, with trying to grow, but also, mitigating as much risk as possible. So it is something that it continues to evolve.
Yeah, for sure. And I think Ken mentioned it earlier when he mentioned financial statements, right? When we're evaluating our customers today, some of this, these situations are not being reflected in those statements, whether, the stimulus package is not there. So we're kind of basing decisions on perhaps some old or information that, we can't really use. So it's really important, again, to communicate with your customer and try and get as much information that you can and look at all of those factors that Julie mentioned, right? What industry is it in? Are they being impacted? Is there an opportunity? Or, is it one of those markets that are, struggling? So having all that information and looking at the 4 C's of credit and understanding specific to that customer is really going to help you with your decision and navigate through the storm.
I think the C's of credit have always included common sense, but even more so today. The guy's not open.
So that makes it the 5 C's.
Not getting any revenue in. I mean, it's pretty difficult to do too much with them.
Good point, Ken.
I think the real concerning part, as things were starting to look like they were normalizing, was the concern of people, companies building up inventories very quickly to get the money flowing, so they had product to move. So you had sales that were at X number of dollars, they dropped off a cliff, and then all of a sudden they wanted to order a bunch of goods, and so it put a huge strain on the credit teams to not only reevaluate their financial strength, but are they even better than, from a credit standpoint, than they were before the crisis. So it was interesting.
Absolutely. And we keep getting folks called out here. So Julie, you're going to be back in the hot seat. We had Michael this last time, so you're back in the hot seat. And they're asking which market segments are struggling the most now in your world. So in the part of the credit industry you work in and what you see, what market segments are having some serious issues?
Mm-hmm. Well, it is those, it is retail. It is those small areas where they may not have been able to. It's anything that's not an essential service, basically. We're seeing struggling, and it's interesting, when we're making collection calls and when we're reaching out, the stimulus packages that we've been talking about. Some companies don't even know really what is available, and we find we're doing some education there on what there is so that they have those funds. Yes. Yeah.
Great.
Yeah, that makes sense. Helping them and then helping yourself because they get that money.
Exactly.
And you finally get paid. Yeah. It's not a bad thing. It's a good thing. Everybody's helping each other. That's the way it's supposed to be.
We didn't
Win-win.
talk too much about the credit role, but the credit professional really does have, it's kind of like a jack of all trades, right? Wears so many hats and, acts as a consultant or, can give some advice or direct people down certain roads when it comes to maybe helping them with their financial situation. So those are really good points there, Julie. Thank you.
Mhm.
Yeah. So I'm gonna
right now
Oh,
I
go
think
ahead.
the floodlights are on the credit team, to perform and provide information. And I was talking to another credit professional just the other day, and she was mentioning that one thing that stands out in her mind that has changed from the past to now is when a salesperson brings in a new account, it's not, oh, this guy's golden. Like the adjectives and the adverbs aren't there anymore.
Yeah.
Here's the application, take a look at it.
Yeah.
Yes, the linchpin of the system has definitely gotten that focus of that credit industry going, oh yeah, okay, I definitely understand how important you guys are now. Which
Absolutely.
makes
If
sense.
anything, this pandemic has really elevated the role, I think, of the credit professional.
Sure.
And that's a good thing.
Too. Yeah,
Absolutely.
absolutely.
Yeah.
So I'm gonna go back to Julie here, and I'm gonna kind of handle the last part of the title of this webinar here, and ask about the future. Julie, if you get your crystal ball out and you're looking ahead, what do you think the changes are going to keep like what changes are going to keep coming or haven't happened yet that will happen in light of all the challenges, in light of what we've dealt with in 2020, knowing that we're not letting up in 2021 anytime soon? What do you see in your crystal ball of what's going to be changing in the next little while?
Mm-hmm. Well, I do wish I had a crystal ball, but a few thoughts are, credit professionals really, I think there's more of a need now than ever for more credit professionals and more trained credit professionals. So I think education around that we'll see more of that. And I'm hoping, more people interested in going into that field. The second thing is the technology. It's going to continue to evolve, and more businesses are going to want to get involved and increase their technology that they're using. The third thing is just around, what a credit professional's role is. Like Lena said, you wear many hats. It's not just, often I think that, especially when it comes to collections, it's thought that you have to pay or you're shut off. And it's not the case necessarily anymore. We do wear many hats, and we need to use, the tools that we have to make informed decisions and really support those relationships with customers.
Absolutely. And if I can add to that, then I think what I would add is the reliance on data, having good data to really help and support those decisions. Technology comes along with that. And of course, the credit professional enhancing and continue to elevate that role because they really are there to assist the sales process. Most of the time they have a lot of information. They can be very strategic in how to continue with communications and make sure that business is successful. That's going to make your business successful as well.
And with that, we've got a couple of comments actually that have said offering, trade lines, sharing data, all that type of stuff. It could not be more important at this time for everybody to be sharing that data of their trade lines and everything. I'm saying that as a credit safe person and all of that, sure. But in general, I'm a big economics nerd. And just to be able to do that and have companies be able to make informed decisions so that they can do things well, so the economy can bolster itself is huge. So I didn't want to take anything from anybody, but there's a few comments in here about that.
Now, I'd also say that some of the changes is the internal communication piece, with the sales team has, because of what's happened, has improved dramatically. And I can see that changing and going forward and being more critical as time goes on. How long of that will stay? Because it's maybe a little bit like a recession. like after a recession, everybody's got it kind of right in their memory, the back of their mind, and this is still heavy duty in their mind. But as time goes on, the economy picks up, profitability builds up. How long they want to kind of keep coming back to the credit team for input before they approach somebody, time will tell. But it's certainly a learning curve right now for them, and it's a good learning curve because to work together to have a profitable business, the more teams work together, the more profitable the company can be. I can see just another thing that is starting to be more appreciated: a disaster recovery plan on some businesses. When they see this pandemic happen and all the changes they've gone through, a company should have a good disaster recovery plan and keep that updated yearly, because things like this can happen and could be quite a different perspective next time, that you might have to rely on some information that you got stored elsewhere. Then, fortunately, everybody kind of picked up the remote aspect pretty quickly, but it could be something different next time.
Absolutely. Well, we do have a couple more questions here, so I'm going to jump into them. How does someone or a company taking PPP funds or any of the other stimulus funds affect the decision making from a credit insurance and credit underwriting perspective?
Credit insurance specific, I guess that's for me.
I was going to say, Michael, I'm guessing you're going to be the first one to answer here, but you guys could talk about, their from a credit management or a credit industry perspective too.
Mm-hmm.
I mean, I'm not an analyst in any way, but I would imagine that it really depends on what industry they're in, what their plans are for the future. Are they taking it? Were they already in financial difficulties and struggling? It really depends what vertical they're in as well. There's a lot of variables in the analysis. It's not just, well, you took out some PPE stuff, you're a bad risk. We know your customer is really important for us. So that's something that we've, even as salespeople, working with our colleagues internally, our internal credit department is what we call a risk underwriter. We're the ones out there going and collecting the information. So we've changed our credit procedures, if you will, and added things to our credit application form. Salesmen are out asking, who are your biggest clients? Who's your biggest supplier? We kind of want to get a feel for the risk upstream and downstream, and having some sense of, where their shutdowns, how long did they last? So it's not just about the loan or the government programs by themselves.
Yeah,
absolutely.
So I think experience is going to, experience kind of got shot out the window when the pandemic hit, right? So, we have to now rely on new information and kind of a new starting point as to how we evaluate. And I think what's important here is treating some of these businesses as, kind of like a new venture. So what's their business plan now that they've been given these extra funds? What's their, how are they going to move forward? How are they going to use these funds? So really understand, what direction your customer is moving into versus, looking at past data or looking at past financials. Let's get an understanding of the plan, and, the credit analyst or underwriter is going to have a good sense of, what market is this in, what's the likelihood of success, and then look at the customer's payment behaviors or behaviors in the past to determine whether or not this future plan is going to be viable.
And I think I've got a couple other questions that are kind of around this. So I'm gonna amalgamate a few things together here. But based on the stimulus packages that are out there, based on the changing of the different dynamics within the different verticals and the economies in general, and all of that, are you guys seeing a shift in how credit terms are being offered to vendors, customers, what have you? Is to help or to protect yourself or any of that? Or are you kind of just seeing, let's just stick with what works?
I think that depends on the financial capabilities of the company that you're in the credit department with.
Okay.
What kind of financial support you've got. I see some changes in credit terms or working with them as far as payments go. So that's certainly true for sure.
Yeah, I think we talked about it being, most companies are being more accommodating. So,
sure.
If there's companies that need help, I think, people will be accommodating. But if they're doing well and they don't need the help, then I don't know that the terms will change or should change.
Right.
Yeah.
The
And I
other
think
thing that I
it's-
have seen is to collect money. I've seen more and more discounts being offered if you can talk the customer into paying the full balance off. I've seen that more than I've seen in the past.
Mm.
Mhm. Yeah, and I would say maybe temporary credit term changes are happening a little bit more, not long term. And it's really a balancing act with your receivable and your payable, because most companies have some room either place to make it work.
Sounds like a plan. Yeah. Well, folks, we're getting towards the end here. We do have, Ken, you didn't get put on the hot seat, but we do have a final little comment for you from Brad. Brad Loner, I think is how you would say his last name. And he's asking if you have a disaster recovery plan for your golf game. So since you didn't get put on the hot seat anywhere else, I'm going to throw that in there. Okay. Credit industry is a small place. So everybody knows everybody. So you can pay him back on that another time, but he just did it for all eternity in our recording here. So there you go.
That's fun. Thanks for
I will just underscore something that Julie said as well. I was just thinking about it, that credit training is something that has come to the forefront as well, and we're seeing that at the Credit Institute as well. Like a lot more people are engaged in taking credit training now than they have in the past. I mean, it's really increased quite a bit. So that's a good thing. That's a good thing.
Absolutely. Well, folks, we've come to the end of our time. To all the panelists, thank you guys so much. It's been wonderful to have you on here and a pleasure for me, and I know for the audience as well. To all of you that are out there, including our panelists, we do have another webinar coming up next week, Tuesday, December 15th, same time, 2 p.m. Eastern, 11 a.m. Pacific time, that we will be talking more in depth about this similar type of topic, the past, present, and future of the credit management. So actually the job itself, what are you looking at within that job, not just the industry as a whole, but what credit managers are dealing with and what they expect to be dealing with and all of that. So it's gonna be a really good one. We have a whole new set of experts that are gonna be coming on to talk to us. You will have to put up with me again, and you will get the pleasure of having Lena join me again next week on Tuesday. If you wanna sign up for those or any of our webinars, please just go to creditsafe.com and you can do that, or you can go to creditsafe.com/webinars and you can always sign up for all of them and see all the past ones. So thank you again, everybody. We appreciate it, and have a great rest of your day. Bye, everyone.
Thanks, everyone.
Thank you very much.
Bye for now.